What's up, everybody? Chris Dover here, head trader at Pollinate Trading and the proprietor there as well. I'm joined as always with crypto. It was Derek. Crypto Derek Zoolander, my menacing I don't know co-fighter sidearm wheel. I don't know, dude. And today. Today we got Nikhil, who goes by SquishChaos on the Twitters. Give a quick intro on him. He's a retail investor, and we'll get into kind of probably that discussion too, for sure, which is a big subject. I've been like, people have this whole like, oh, crypto, I'm just a retail guy or whatever, and like retail can run circles around institutions. I love it. Currently investigating DeFi and other asymmetrical opportunities. He is a recent grad of medical school, and in a few weeks we'll be doing his residency. So while you guys were all just sitting around staring at charts and being lazy, this guy wrote a 79-page research report on Ethereum while completing medical school. So everybody here feels bad about ourselves. We'd like to have somebody up there setting the bar. He is also, much like a lot of us here, irresponsibly long Ethereum. And yeah, what's up? Welcome.
Hey, thanks for having me.
Yeah, you're coming at us from the global headquarters of SquishChaos, and in the southwestern part of this country, I think.
Yeah, I've been moving around a lot since graduation. I did med school in Manhattan, at Mount Sinai, and so I'm moving to Denver for residency. So it's the whole thing. I'm, my parents live in Austin, so I'm just moving around a ton right now. But I'm in Austin right now, so it's been good.
Cool. Yeah, we're down the road a little bit from you on the other side of the Rockies here in Arizona, and Derek there is in the land of wildfires at the moment.
It's pretty sunny today, actually. I got to give it up. Never disappoints, we always got a good amount of sun. It's probably like 70 degrees, can't complain.
Shouldn't complain. All right. I threw out some questions to the folks in the trading lab, our degenerate traders, we call them degens, who've done pretty fantastically this year. So happily they wear that tag. So Squish, or Nikhil, reached out to me a month or so ago, I would say, maybe a little bit longer, and said, hey, I just wrote this 79-page research report on Ethereum and why I think it's going to 150,000. And I was like, okay, as we just said, my inbox is not your to-do list. Thanks for reaching out. No big deal. I got plenty going on. And when you said 79 pages, I was like, really not that excited about getting into this. And then you hit me up a couple more times, and I was like, okay, you know what? And you hit me up with some good like little bits of it. Like it wasn't like, hey, I've done math and I think this is, like this is what it is, or measured the distance from the moon to Earth and this is why I think this is the thing, whatever. Like there was no sun signs or anything. It was actual great research. And one of the, I'm going to give it to you here to chat about. But first, one thing I want to say is what we find in crypto is the fundamental type analysis actually is so much more useful than it tends to be in more mature markets like equities and such. And people get caught up in the technical analysis side of crypto, but this was great. And this, for what it's worth, this really helped kick off a whole new strategy for us at Pollinate. So I will thank you for that, and thank you for your persistence in getting me to take a look. So let's start with the headline, 150,000, and let's just back it up from there. Let's start unpacking the route that we get there.
Sure. Yeah. A lot of people are like 150,000. That's just impossible. They're like, that's north of $15 trillion market cap. just you're never going to see that happening. And I want to clarify that, in my report, when I lay out my target, I actually say my base case is 30 to 50,000. And I think we can get to 150,000. But the way that happens is an illiquid speculative mania. And so that can sound completely baseless. If I'm just basically if you read that as me just saying like, things are going to get crazy, like pick a number. But it's not when you read my report, because what I do is I outline a lot of very concrete ways that liquidity is going to be drained from the market and that demand is going to dramatically ramp up. And those are the conditions under which you start to see prices that you just didn't think were possible before. So my report, I lay out some valuations as well, because I think that's another thing where it's like, it's like, sure, we could go to 150,000 on just illiquidity and demand, but it really helps if there are narratives that actually support valuations that go that high, because people who are buying at 80,000, at 100,000, sure, they might just buy it because they think this thing, they can flip it. But if they're buying because they have a valuation model that also kind of supports that adds some conviction. So yeah, so the path that I kind of go through to lay out my 150,000, I start with something I call the triple halving event, which is kind of a big catalyst, I think, that's coming up over the course of the next 6 months to really move price significantly. And then I talk about how when price moves, that also triggers narrative. And so that means when Ethereum goes up a lot more than other cryptocurrencies because of specific to Ethereum catalysts, people start looking like, is there anything unique about Ethereum? And I think they're going to find a lot that is different about Ethereum than you see in the rest of the crypto space. And there's certain mechanisms that are going to be taken advantage of that'll also reduce liquidity. So I think that combination is kind of how I get to these insane price targets. And we can talk about later. There's also valuation models that I kind of go through, a few different valuation models that people have used for Bitcoin and Ethereum, and show how I think Ethereum can get definitely north of 50,000, but often on a ramp to 100,000 plus on all of the different valuation models.
So jump in anytime you want, Aaron. But we ran an experiment this past month, not the crypto world, I guess, or an experiment was ran. We saw Bitcoin drop from 62,000 down to whatever, 40,
29.
Whatever. But well, not that specifically.
Oh.
I mean, prior to the big drop.
Yeah.
Ethereum went from about 2,000 to 4,400 in about 2 weeks. If my timing's right, I don't have the chart in front of me, but I remember looking at that quite happily, being a lot more exposed to Ethereum personally. We did see exactly what you're talking about, and we can kind of go back and look at that period in time and see what people were talking about. What was the narrative that changed while 4,400 Ethereum was printing, or 4,390 or whatever it was printing? There was definitely a narrative change. Bitcoin's old and slow. Bitcoin, it's just a store of value, doesn't have utility. The ultrasound money world of Ethereum, kind of that meme took off as well past few weeks. What were the things that you saw, Akil, in that period?
Yeah, it's interesting. And I agree with you. I think there's the beginnings of a narrative change. I definitely hadn't seen a lot of that before. And when we were around 4,000, it started to shift. I will say, since we've crashed, most of that discussion has been limited to the Ethereum crowd again. Yeah. A lot of the people who are outside of Ethereum, who are all starting to be like, maybe this is interesting, completely stopped talking about it since it's crashed. And so I think there's just a ton of room for adoption and conviction in the story to change. But yeah, I mean, I think it's starting to get people. Like, there are absolutely factors that make Bitcoin a really, really unique asset. And definitely an asset that a lot of other crypto opportunities they can't really compete with certain aspects, like the security of the network. But I definitely think that Ethereum can, and I think it will compete more and more. And I think one thing that's going to be really interesting is certain dynamics around holding it in a portfolio are going to change. So for instance, when Bitcoin was at $20 billion market cap, looking at the digital gold narrative was really attractive because that offered, I don't know, like 50 times more than that upside, right? Because how do you get to $10 trillion? But now that Bitcoin is around $1 trillion market cap, you have 10x upside if you think that it's going to be digital gold, and that's the max opportunity. And so there's definitely asymmetry where a lot of the Bitcoin bulls have to kind of say it's not just digital gold, it's also the macro environment we're in means that a store of value should have like a larger role in the asset space. The portfolios are going to need them more. It's going to take more assets than gold ever has because of these unique like Fed printing narratives. But that's, you kind of have to make that kind of argument, and you're limited to like narrative to convince people that you're right. With Ethereum, I think what's going to change is you're going to get a lot of the same store of value narratives, but I can also just convince you with more traditional mechanisms like a dividend yield and things like that. And when I am convincing a pension fund to buy Bitcoin, I'm convincing them to buy gold would be pretty hard too. They don't usually have more than a 1 to 2% allocation, if at all. Mm-hmm. And so compare that to the allocation they have to things that have yields. Now we're talking serious money, right? And it makes sense. Yields are much more tangible. They don't necessarily, if they collect the yield from crypto, they don't have to keep it in crypto. They could rebalance those yields out to other assets. So the dynamics get interesting when you actually have competition in the space, right? And Ethereum's at the size right now where it can really compete. And I talk about 2 upcoming changes, EIP 1559 and the merge to proof of stake that we'll have to talk about a little bit. But those are the 2 catalysts that I think really make Ethereum competitive with Bitcoin on a kind of larger scale.
Yeah, so July 14th, we've got, Aaron, I saw you were getting ready to go there.
Oh, no. I mean, that was honestly just like a really great summation of kind of like, what's going on. I guess honestly, kind of, because I'm kind of in a similar world, I would say I'm like a little more of a DeFi maximalist in some ways. Like, to be honest, like most of what I hold is like DeFi stuff. And obviously I have ETH because that's like the main SOV for like really most DeFi protocols. And so like kind of just piggybacking off of that, like I have been talking to like, I guess, older people or just anybody that's trying to get invested in Ethereum, and I try to pitch them that dividend and yield stuff, right? And they are receptive, but it's really funny, like for some reason they still can't wrap their head around Ethereum. And like personally, because I'm a tech person, like I got it pretty quickly and quickly like thought, hey, this is way more interesting than Bitcoin, even though like I'll preface, Bitcoin is very interesting and whatnot. I respect it. The security, like you said, is amazing. But you're right. It's like a 10x from here, probably. Like in a reasonable world. I mean, of course, it could go to 1 million, in the right circumstances, for sure. But like, yeah, like aside from the dividend yield, like what are kind of things that you pitch to people to kind of like, I don't know, make them feel a little bit more comfortable about Ethereum? Because some people might just be like, I don't understand it. Digital gold, I'll buy some of that, So.
Yeah, I mean, the thing is, I will tell you it's not easy because even though I have infinite conviction, I think what makes it an opportunity is that it's hard to wrap your mind around. There's so many layers, right? So like I have a thesis, but if you look at my report, the first like 1/3 of it is laying out a framework. So when I write a report on an equity, I don't spend the first 1/3 of it explaining like how does a discount cash flow model work, because everyone knows how that works, and I can just assume that. But when you look at crypto, you have to like first introduce your theory of like, how do I approach crypto? Because everyone approaches it differently and no one really knows what like the holy grail of crypto valuation even means. And even the approach I introduced was, even then, it was, I looked at fundamentals in the way that they move narratives, but I still didn't actually ground anything in an intrinsic value estimate the way I would look at equities, right? Even in this report, I think I'm working on some stuff. I think it's possible. But I think it's really something that a lot of people outside of crypto actually do understand, and are probably wise to be skeptical of, which is that you can't value a crypto token the way that you value a stock. You know, if you own Chainlink, you can't just be like, oh, great, like I'll just think about this the same way as I think about Disney shares. It just doesn't work that way. And so that doesn't mean that Chainlink doesn't have value. I think that's where a lot of people go wrong, is they skip to be like, well, that must be useless. It must be worthless. But it just means you have to get more creative. We're in a new space. These are new types of assets, right? So the kinds of arguments that I made were still, I think, a little bit more traditional. So I talk about, okay, you might not understand what crypto is, but I bet you get the simple concept that, prices are a function of supply and demand. Supply is going to go down, demand's going to go up. I have a catalyst that tells me that this will happen not just like in the infinite ambiguous future, but in the next, starting in the next 6 months and over the course of the next 18. And then I can also just tell you that story. I can say, Visa, you have a Visa credit card, like Visa is going to accept stable coins. I can explain what NFTs are by connecting it to concepts people have around art. And I think where the Ethereum pitch works well is that you can hit it from a number of different angles. With Bitcoin, it's like ride or die on a single narrative, right? It's like if they get the monetary policy thing, then you're in. You got a Bitcoin maxi. And if they just like are not convinced, or they're convinced, but that means to them like a 1% of their portfolio, and they're still like, of course I'd have a huge equity allocation, and you're not going to get much more than that. Ethereum, you can hit from all different angles, and that makes it hard to brand in like a quick pitch. But it's also, I mean, it's what makes the space so great,
Yeah, man, I'd agree totally on that. Like, I don't know if I like digging deeper into your kind of report. Actually, there was some, like, the thing that kind of interested me, just because like I'm pretty deep in the weeds compared to most people, so I kind of like think I like most of the stuff you mentioned. I'm like, yeah, like I kind of agree more or less. But like the CNBC and like press coverage stuff was interesting to me because I've seen a little bit, of coverage, but I think you obviously have done a lot more research to find out, well, hey, it's obviously not getting as marketed as well to people as, for example, Bitcoin. I mean, obviously, like my grandmother will mention Bitcoin to me. She's just sent me an article, hey, this is in the LA Times, like it's a scam, blah, blah. And I was like, am I still getting this article 10 years later down the road? Pretty funny. But anyway, yeah, that kind of like press coverage stuff like is pretty interesting to me. And like, I don't know, what are some things you would look for in kind of like just that narrative changing a little bit more? I mean, we've seen a bit, like I've seen the Ethereum price on CNBC recently, but
yeah,
other than that, I think, not to go on a tangent, but I did see an article about them saying, hey, you should get into mining Ethereum recently. Which
start now.
Funny.
Get in early now on the mining. It'll never change. They'll never change the algorithm. Do it now.
Exactly. I mean, I saw that too. I was like, wow, you're recommending mining. You literally are not in the space at all. But I will say that I releasing this report has been fascinating because so many people have reached out to kind of talk about their thoughts on the space. And I have realized that I think it's a bigger issue within people who own Ethereum than you'd think. Like, I think a lot of people in the space, they are at a level where they're comfortable with the idea that it's a new technology. It's interesting to them. They're sophisticated, and it's a small enough portfolio allocation that they don't feel like they can't sleep at night. But then they're not tracking the space day to day. So I've had so many people tell me, oh yeah, I've been in Ethereum since 2017. And I pause. I'm like, wow, you must know this way more than I do. I'm just going to like kind of humble up here. And then they'll proceed to tell me like, the issue is, the fees are just too high. I just don't think it can ever scale. I'm like, okay, so you really haven't tuned in since 2017. Like, you never paused to kind of look at the space since you bought it. And hey, like power to you for still being in it. You're positioned to do quite well, I think. But it does speak to the idea that it's not just CNBC. It's not people who are outside of the space. I think it's even people who are inside of the space, just because it does take some amount of willingness to get into the weeds. And I think the other thing is that most people don't have, there's no like quick checklist, right? So like when I own an equity, like great, I'll tune in on the conference calls quarterly, and I'll check the 10Q and the 10K, right? But like, EIPs aren't coming out on like a quarterly earnings release and you just find out what the roadmap is, and you don't have like a company that's like, doing this like nice, clean, trusting like roadmap for you. So a lot of people, they start to tune out the crypto hype on Twitter, and then they tune out they almost tune it out too much. You know what I mean? They just don't hear the actual things that are changing. So I think we're not gonna see that narrative. People are like, oh, like the narrative's already happened. I don't even think we've started yet. Like, I just don't think people understand the space at all. And I think that's true. If that's true of people who own the asset, like that's definitely true of CNBC, people who own none of it and are just kind of commenting on it. So yeah, I think there's a lot of really interesting stuff to come. And I think most of it is going to be, I think people underestimate the amount of media attention that's going to come from scaling, because I think right now, all of the usage we're seeing, a lot of people talk about usage statistics increasing on DeFi. They're all coming because people are like, they're willing to interact with the space despite the fees. So if you like, I can just imagine the number of products that are currently not viable because of fees, that like 6 months from now, we're going to start seeing massive rollouts of like retail products. And suddenly, like if I have a friend who's like, oh, this sounds interesting, like might as well get into it. Like right now I'm like, yeah, there's also like a $200 fee to send $30 of ether. It's not gonna, they can't even experiment in the space, it's not like worth it. The barrier to entry is too high. But that barrier is going to get much, much lower. And when you get this massive adoption, the media has no choice. They have to cover it because everyone's in it. And that just can't happen without scaling. So, maybe people are right. Maybe we'll never scale, but I think we're going to find out pretty soon that they're wrong. And yeah, I think even May 28th, Arbitrum is the first layer 2 that's going to release to mainnet. So that it might be coming sooner than we think too.
Yeah, that optimism delay was not great. But honestly, not to go on too much of a tangent, but like I've been pretty exploring like Polygon and Phantom recently, and I gotta say it's really fast and very cheap to use both of them. And other than me like feeling weird about bridging my assets over to another network, which like I don't know, like I'm just a slow mover personally. It will take me a couple months to try something new. Like I literally
the guy who's been DeFiing since like
no, it's
like a year and a half now.
Yeah, no, I mean I didn't start exactly in DeFi summer, but I started like end of November, which was basically like the bottom of the last move. So I just got some luck on that. But like, yeah, even back then it was like I was paying $10-$20 for fees and it was like reasonable. And now I'm really like I'm like, okay, do I want to make this move? Like, let me go into Excel and like write out the fees. Like, I'm not just like doing stuff. So like doing stuff on Polygon is literally like a fraction of a cent and like is just like a snap of the fingers. Phantom was even quicker. I haven't really used Binance Chain and don't necessarily advocate for it, but it is EVM. So like, I gotta tip my hat for them to helping us get some adoption. Like, honestly, a real advantage is just that I can just use my MetaMask and just plug in different networks and just switch in between them. And it's super easy, but
yeah, I mean, part of it's going to be that user experience too, right? Like, I mean, but it's like the user experience doesn't even matter if the fees aren't there. I don't think the bottleneck is that we don't have enough fantastic engineers to make a great user experience. I'm so skeptical that that's the issue, right? It's like, I think there's some like EIPs that are coming out to change the way fee markets work, make things a little bit more convenient for user experience design. But like, big picture, what's really holding us back right now is just like network congestion, which is a solvable problem. And you could argue, yeah, a solved problem. It's just like rolling out. And yeah, it's so many different solutions. It's not just one, right? It's not like just Polygon. It's everything. And it's like now and in the next 6 months is the timeline, which is, right at the same time as EIP, right at the same time as EIP 1559, right at the same time as the merge to proof of stake. And so that's where my thesis is built on. I'm like, I was looking at each catalyst. I was like, oh, normally I'm looking at these. I'm like, oh, great. Like, we're one catalyst here. Like a year later, there's another catalyst or something. They're all like literally, March 2022, we're looking at a completely different asset, right? Like every aspect of the case for Ether, when someone comes to me with a problem, I'm just going to say like, check your facts, and I'm going to walk away because it won't be true. Like in the moment, they'll be like, oh, the security. I'll be like, check it again because it's different now. Proof of stake is, orders of magnitude more secure. Transaction fees, check it. Like, go to the markets right now, see what it costs to trade. And that's how you convince people. You don't say, oh, in the future, like 6 months, 8 months from now, I'll convince people by just saying like, here's a link, go, like you can trade like $2 on it if the fees are 1 cent. You know what I mean? And I can't say that now, but it's going to be pretty amazing to be able to do that. And I think that's where the media coverage comes in, because that's another thing. I didn't write this in my thesis at all, but like DeFi's whole thing, decentralized finance, it's a competitive dynamic, right? We're creating something new here, but like the idea is really to compete with traditional finance. And that's, the podcast is called Bankless, right? Like, so the question is, when you compare like the cost of transferring fees over Western Union to the cost of transferring it over the Ethereum network via stablecoin, and the user experience for that as well, right? So right now, like you have these expensive volatile fees, and the user experience involves like a lot of like learning curves and things like that. But as soon as the fees come down, trust me, so many different people are going to come in and say like, oh, great, I have an account that seamlessly allows you to put money in and transfer it without even interacting with the blockchain yourself. Like, it's going to be run on the blockchain, but it's going to be an iPhone app. You know what I mean? And that kind of competition is what I think a lot of equity analysts will understand. They'll be like, oh, shoot, this is money not going to this company. Where's it going? Now it's going to crypto. I better cover this space. So yeah, anyways, if that was happening in 2023, there's not much of a thesis there for now. But if your markets are forward looking, and I argue about even some effects that can't even be arbitraged in my paper. But if you're trying to front run that move, yeah, like right now, that's what you're doing, so yeah,
for sure.
Let me jump in with my fund manager pitch on like another parallel narrative to also the old guy in the room here. Kind of, I've lived through the internet became a thing, that the commercial internet became a thing, or at least the non academic and the non DARPA internet became a thing. Basically, you have Web 1.0, Web 2.0, Web 3.0, right? Web 1.0 was the internet, AOL and chat rooms, and Amazon and PayPal and eBay and all that sort of stuff came from it. And that was the big move. That was the internet size move. That's what it was. It goes from, basically, it takes our economy from, I think it was somewhere around 30 trillion to 50 trillion, just becoming an internet economy. When the internet jumped in the world, it changed. And even back then, the internet, and having a computer, most people worked from computers in the early 2000s, late 90s to 2000s. It started happening, but it wasn't as prolific. And then Web 2.0 comes in, and it's mobile. And so back to Web 1.0, as you were saying, the user experience in the very beginning, like you were a god if you could do HTML. Like, you could name your price, people would be hiring you left and right, let alone a certified Cisco network administrator or something like that. If it wasn't easy to get your hands on a server, and like a static IP address to point to your DNS so that you can say, here's my website, www.blah.blah.blah.com. It wasn't that easy to make that happen. Now we just, go to WordPress or, Squarespace or anywhere, and you're just like, I need a website.com, boom, and within like a few minutes, you have a website up. So that became, you went from, I needed a server, I needed a coder, I needed a designer, I needed to pay for bandwidth, I needed all these things, to now you could just spin it right up, right? To Web 2.0, same thing comes out. It's just a mobile device now. It's this big. So now you need to know how to program in, now I forget what Apple's, geez, what is their language? Starts with an S. Anyway,
Swift, right?
Swift. There you go. Thanks.
Yeah.
You or Java or whatever for Android, like you had to have a really tough language. And now you can build a web app pretty much, just kind of like using basic web tools. You can make a web app. And of course, it doesn't require learning all that. Slowly it moved to user interface became awesome. You create an entirely new economy, the gig economy, all those sort of things. Ironically, the fastest paying job out there is an Uber driver or Instacart or whatever. The second you end that transaction, you're paid, within a little bit. And that's such a close analog to what crypto is like. You finish your smart contract, boom, you're done, right? And so as far as like getting people on board to figuring out how this is, instead of waiting for your paycheck at the end of the month or every 2 weeks, where every month maybe this is going down the Bitcoin maxi route, but every month the Fed's printing. So every week that you're not getting paid, that value that you have sitting in there waiting for the company to pay you is dropping slightly in value. Whereas you have
I agree. You don't need to go down the Bitcoin maxi route. You can just say, like, there are so many inefficiencies around the fact that arbitrarily we have paychecks like delayed by 4 weeks, or
right.
Like if I do the work today, like why can't I buy dinner with the money that I earned from working today's 8-hour shift? Right.
Mm-hmm.
And that's like a administratively complex task, but that's incredibly simple for crypto, because the time log I enter could literally just go to a smart contract that delivers that cash to my account. In fact, we could even have me log my time on, and that money could gradually be transferred as I work. And I could, during the shift, I could buy like a taco with the money that I'm earning in the same shift, right? Like that inefficiency can seem small, but like that's happening for every employee of every job on the entire planet. And so I think, like, just like you said, the value unlock is enormous and it's everywhere. And that's not even getting creative with how smart contracts could be used to do things we don't already do. Like that's just using like smart contracts to fix like weird arbitrary things that we do today. But obviously people in DeFi are thinking much bigger than that. So yeah, I agree completely.
Yeah, it's pretty exciting. The one of the things that this last week Elon tweeted and made the internet angry. But there was also some, this is the FUD cycle, right? This is just the standard FUD cycle. And one thing that I was mentioning, in the past month, Ethereum went from about $2,000, $1,800, somewhere around there, broke the 2,000 and just pumped hard into the 4,400 level. And what you got was, like, us three probably have had Ethereum of some sort over the years, even if, even if we just read Squish's report here a couple months ago and just, I'm buying, I don't know, April 27th, it looks like, so a few weeks. Seemed longer than that.
A lot happens in crypto.
Yeah, it's true, right? It's been a long week and it's already Monday. But what you get, so with the price action, the way price action moves and the way markets really moves, and what we're talking about is unlocking this speculative layer where it just goes. Crypto's been the best representation of that, because you have 25%, 50% up days and 50% down days. That's not something that is allowed in regular equity markets. But what we have is, we had all these late buyers come in and like show that experiment that we were talking about, the liquidity of where people started realizing, holy crap, Ethereum could take, what was one of the narratives, the flippening. we get that every couple of years. You get a flippening, which is that the number one top market cap crypto is Ethereum, not Bitcoin or Bitcoin Cash. We did actually have a flippening with the Bitcoin Cash thing for like minutes. I think maybe not. It was close. So we've had experiences with that. When the price goes high, you get so many people that buy at speculative levels, right? And it drops down. So they bought at 3,500, they bought at 4,000, they bought at 4,300. They all got stopped out. They all sold. They're pissed off. They don't want anything to do with crypto. So we spend the next few months doing nothing. And then the next time they check and they come back and they see, and you see Ethereum at 5,000 or at 6,000, you go, I'm not doing that again. Nope. I'm waiting for a dip. And we always see the dip not getting bought. And it's usually a shallow dip is the last opportunity that you have. And that's the way you get a strong bull market is you have everybody on the sidelines, because when everybody's in, there's nobody else to buy, right? But when everybody's shaken out like they are right now, they're going to have to chase, and they're just going to continue to chase. There's some people that are going to say, whatever, I'm just going to own it. And I'm not leveraged and whatever, I'm just going to own it. And I believe in it. And I'll wait for the next Squish report to keep me excited or something like that. But that's really how that's how it really moves, is when price takes off in a stealth rally that nobody notices until it's already at 3,000. And then they see 3,000 Ethereum and they're like, ooh, 4,000, I got to get in.
And I want to, because first of all, I completely agree with you. And just to be honest, a lot of you guys' work on trends, that really influenced my thinking about how does trend following work. You need a diverse crowd. You need to kind of climb the wall of worry. So I completely agree with you. The one thing I want to clarify though for listeners is I think there are factors that exacerbate that with Ethereum relative to what you'd see in a normal asset. And so particularly in my report, I talk about how in a lot of DeFi applications, Ether is locked as collateral for lending purposes. So the idea would be I'd put my Ethereum into this smart contract. In return, I get this yield on it. And then I have an incentive as a result to just not touch it, right? And in a lot of cases, I can't even touch it. And then the second thing is Ethereum's moving to proof of stake from a proof of work system. And so that proof of stake as a way of securing a blockchain involves staking your Ether, which means locking your Ether up and putting it kind of at risk to validate transactions. So that has a lot of different dynamics. One thing being that you get yield from that. But another thing is that all of the staked Ether can't be touched either, right? And so right now, I looked at it in my report. I was like, right now, if you add up the staked Ether, because there's a little bit that's been staked before the merge just to kind of help the transition. Yep. So if you add up the stake plus the DeFi, the amount locked in DeFi, that's 12% of market cap, right? So I talk about in my report how like, great, so that's 12% of market cap. And then like you said, there's all these kind of narrative shifts we're seeing even now that are pushing it up 50%, 100% in these like short periods, right? But talk about in my report how I think we could very quickly see upwards of 30% of market cap locked and untouchable. So what happens when you see that kind of a reduction in the amount available to buy, right? Because right now in that narrative shifts, everyone goes to buy, and any normal asset, there's sellers. But what if those sellers have staked their Ether, right? So it's not just like, in my view, that's a much more powerful force than a cultural kind of hodling mentality or a like traditional, like I'm going to buy and hold forever investing mentality, because this is not a psychological force. This is an economic one, right? So it's like, it's not just that you have to believe and have conviction. It's that you might have signed up to stake, and the queue in order to enter into staking might at that point be a year long, right? So then you have to make a decision. Do I unstake and sell knowing I can't come back and restake for a year, or do I hold through this? And I think what you're going to see is just economically enforced illiquidity in the asset, you know? And then we come back to what you were saying, which is that exactly that you're going to have narrative adoption by a lot of people who were starting to get it, got freaked out, sold. Now they're going to come back. The price is going to be a lot higher. They're going to be waiting for the move. It's going to keep going higher. And when they want to finally come in, there's no ether to buy. And I think that's the unique part that I tried to bring in my report, is that that's something that differentiates it from a normal uptrend. And that's what makes it so that I can have, instead of it's crazy because I'm arguing it's going to be more volatile than we've ever seen in a space that's already more volatile than we've ever seen, right? And so I can't just say, oh, Ethereum's going to come out with something new and different, and that's going to make it more volatile than all the other DeFi apps, because that's the entire crypto space is doing that all the time. But what makes it this unique is that Ethereum's going to have specifically a supply shock, right? So then all the normal narratives will affect Ether more than any other asset at that time. And so that, I think, is what kind of makes things really, really crazy in the future. And it's also important to kind of set your perspective, because your willingness to come to the market and sell, if you're modeling where prices could go on a just traditional framework or even a backwards looking framework, you're not going to expect the volatility we're going to actually see. So you could very easily see people selling early and then FOMOing back in when they see like, oh shoot, it's at prices I never thought it could ever get to.
Yeah. Well, look, I mean, we could easily just look at Ethereum and Bitcoin right now. It's easy to sit there and think, oh yeah, look at Polkadot, look at Comp, look at Aave, look at these. They started from nowhere and quickly pumped up. That's typical in newer products in the crypto space. But 1400 Ethereum was just, I remember talking about that back in 2017, and people are just like, that's, that. And even in 2018, 2019, 2020, people are like, that never happened. 1400 never happened. It's a $300 asset. Not $300 asset, but $300 price is the thing that everybody always thought about it. And yeah, I remember talking about getting to the mid threes, thinking like 3,600 was my target. I knew that we were going to get there, and people kind of thinking that's nuts, and getting to 26 or 26.8, I think was my price on Bitcoin, and people are thinking I'm nuts. And now people are like, I hope we don't see 26.8, right? Like it's only been a short period of time that we've seen this massive growth. Like most of our traders here in our group, and I assume this is just nothing special about us. It's just, that's who I talk to, are up about 1,000% in about 6 months. I think, a lot of people without leverage, I think there's a lot of people in that case, and in that area. And that's one of the easiest things to look at and think like, how can people not see that that's just pure speculative levels? We're just speculating, right? Like, well, maybe Bitcoin, because there has been a definite move. And I have been talking to OTC desks and fellow fund managers that are saying that there are non-public company businesses that are buying, so they don't have to report. Right. Tesla, Square, MicroStrategy, they have to report that stuff. But ChrisDoversDonuts.com doesn't have to report that I put $1,000 of my monthly revenue in Ethereum,
what's interesting is I'll say a lot of that. Sorry to just interject real quick. A lot of that is based on like the Bitcoin narrative, where a company is going to put this on their balance sheet because the dollar devaluation. So the way you respond to that is, if you completely agree that the Fed is devaluing dollars second by second, you say like, amen to that. And if you basically don't buy that at all, and you're just like, what are you talking about? Like, I earn dollars from my job, everything's fine, this is complete overreaction, then you're basically just like, the world has gone absolutely mad. And a lot of businesses might say like, we're not going to even consider this because of that, right? But I can easily imagine a world where payment processors are created, or even Visa has to have a huge amount of Ether on their balance sheet, not just because it's a store of value, but because they're settling, like Visa might create a layer 2, and they're settling transactions every day, every hour on that layer 1. And they need to have a store of Ether in case the price of Ether shoots up on them, so they can settle transactions, because they can't just afford to have the prices vary constantly. So that's an interesting angle, because a lot of people have been using it just as, again, a store of value. And it's kind of weird, because we normally wouldn't think of Tesla as having an investment portfolio. You know what I mean? Like, it's a new kind of argument. Some people buy it, some people don't. But if in order for you to pay for your car, you would rather just pay for it in stable coins. Maybe Tesla needs a little bit of Ether on their balance sheet just to facilitate you paying for your cars, because now this is a payment processor, right? I don't know. Like, we're going to see how this space develops, but those kinds of arguments to me are a lot more powerful when they're framed from that kind of utility perspective. So anyway, I just thought that was an interesting angle.
I agree. I mean, there's one thing we've been talking about is like, if I have, like, let's say I have, I don't know, $10 million, or I have a business unit that accounts for $10 million in revenue, 20-30% profit margin. And so, 70-80% of that is the manufacturing, design, manufacturing, assembly, shipping, distribution, sale, marketing, customer support, servicing, lawsuits, paying your sales staff, paying every person along that way. What if I just take that $10 million, well, probably more like 100 million. What if I just took that $100 million business unit, got rid of everything, all that overhead, and instead of having, a 20 or 30% margin on 100 million, let's use 100 million, it makes more sense, $100 million business, where now I'm risk a lawsuit, I'm at risk of, somebody coming in sick, people quitting, product malfunction, anywhere of the supply chain breaking, any of that. Or what do? I just go and, jump into the DeFi world. I go stake Ethereum, and I do know that there are companies running experiments right now with just think about the unemployment that could cause if everybody's sitting here thinking about like all these other things, like, oh, I just don't need to have employees anymore and my money will work for me. And then that just, not in a bad way, it just moves the stack down. And so now you have a lot of money in that ecosystem doing smart contracts.
Well, I think it's going to move the jobs to DeFi,
to
right?
separate areas. Yeah. I didn't mean to put it in the sense of like taking it. Oh no, the robots are taking our jobs. I don't mean that.
It's just, yeah. If you're working at a market maker right now and your job gets replaced by Uniswap, that doesn't mean you're just not going to have a job. It likely means you're probably going to be working on either like a Uniswap related project or something peripheral to it, because that's just the most competitive product out there, right? So maybe you work for a competitor, maybe you work for Uniswap itself. There are, a million ways that automated market makers are still a very early product. Like, we're seeing something great, but yeah, I mean, it's fascinating to think about kind of what happens when an emerging technology starts to kind of uproot everything around us, right? Same thing. I mean, I'm graduated medical school, and I think about like electronic health records and how suddenly everyone had to just uproot and take these paper records and move them online. And like, of course, there were jobs that were quote unquote destroyed, but that's not true, because there's still a whole industry that needed people to provide services. It just changed, and that's what's cool. The space is just constantly changing.
Yeah, I was actually going to ask that question. I think you answered a portion of it at the moment, but are you considered a doctor, or are you just considered?
Yeah, now I am a doctor as of a week.
Official. Let's call him the right way then, Dr. Nikhil, or is that how you want to do?
Yeah,
come on, respect, man. My apologies.
No, I appreciate it.
How would you? Let's just take a step and like, where would you see this working in the medical field? Like, obviously we know the medical field is going to change. I assume the medical field is going to change dramatically over the next few years. Technology, biotech, bioengineering, bioinformatics.
Yeah, it's an interesting idea. So one thing I want to be really careful about is I don't know enough about the space of health records in particular. I know there have been a lot of, like, it's not an original idea to think, oh, maybe I could put health records onto the blockchain. I know a lot of people have been toying with it and potentially testing it out. And I don't remember exactly the details, but I just don't remember hearing a lot of great success stories coming out of that. I think the issue with healthcare is that in a lot of other fields, the most rational actors are going to look at the upside from some near-term sacrifices and say, look, we gotta decrease the regulation in the space, because the innovation is going to come at such a huge benefit that it dramatically outweighs the potential for like short-term harms. In medicine, I think the history of medicine is just littered with examples where that gets taken advantage of. It's not to say there aren't tons of examples where we should have moved faster. Of course, medicine and healthcare innovation, like, it needs to move faster, and we need to deregulate certain aspects of it. But you can't have that like wholesale, like you can't, like DeFi is like open source, right? It's really going to be hard to ever have an open source approach to developing like private healthcare information record system, unless you just literally don't care about your privacy or something. There are aspects of the blockchain that are fantastic for that. You have decentralized security, so you don't have to worry about hacking in the same kinds of ways. There are still security concerns, but they are very different and potentially better suited. No one entity owning the system is also fantastic. So we get frustrated all the time where patients will come in from one hospital, but we don't have the records here. And the blockchain would be fantastic for kind of solving those kinds of aspects. But it's worth noting that you can't just start a product up tomorrow the way you honestly can for a DeFi app, right? Like if you have an idea today, like, and you know how to code Solidity, like you can get something running pretty quick for DeFi, because you can just test it out like in small scale. It's a lot easier. And for healthcare, for good reasons, we have a lot more caution in the space, because no one wants to participate with their health that way. So it's going to take more time. But I think the way I see this space developing, I think, it's obvious, but finance is such a great test case, because so for one is you have a clear competitor. Two is it's high stakes, which means like something like security is just all important. So in order to get this working and competitive in finance, you have to solve a ton of problems that also need to be solved in order for you to effectively use it in other fields, right? So I see the next maybe, and speculating on time horizons is tough, but maybe the next 10 years as the emergence of DeFi, but not necessarily the maturity of crypto, because there's a huge range of applications outside of finance that crypto can be applied to. It's just not getting that attention right now, right? So when like right now, all the upside is in DeFi. Eventually, when it's priced correctly and adopted, the upside will no longer be in DeFi. But that doesn't mean the upside's not in crypto. It could be. People talk about the metaverse a lot. People talk about different kind of gaming and like whether the VR economy will be built on crypto rails. And I think that's the kind of conversation where we'll be talking about using it for healthcare, where we have these very defined, understandable, and well-tested frameworks where we're not wondering how secure Solana really is. Like at that point, we know exactly how secure it is relative to Ethereum, relative to Bitcoin. We have proof of work, we have proof of stake, and we have a number of other consensus mechanisms that have been tested. We know what works, doesn't. So when we want to move your healthcare information on the blockchain, it just feels a lot safer to people. So I'm excited about it, because I think people have naturally come to the same conclusion, which is that like, let's go to the point of least resistance, and maybe for good reason, maybe for bad, healthcare is not the point of least resistance. But there's a huge amount of upside in healthcare. So let's ground ourselves in this kind of finance applications. And then from there, we'll take on the behemoths that, healthcare is always so slow moving, but yeah, it's coming for sure.
That's incredible.
Yeah,
I think, go ahead, Aaron.
Oh no, I was gonna say it's like the question where you're like, you don't need a blockchain everything, right? I think you gave me a flashback to Denta Coin, which was just like a blockchain for dentists.
Yeah.
Do we really need it? I don't know. But yeah, no, that was really interesting, dude, because like the way I think about kind of like the key areas of like at least ETH or whatever, it's just like, okay, 50-60% DeFi, 40-30% NFT, 10% some people are experimenting like right now, like almost. And even with NFTs, like I think people are getting too lost on the art side of it, because it's really just, you know, a digital contractual agreement that could be used for so many different things. I mean, including just medical stuff, right? Like,
You know what I was thinking about was that, you know, NFT, I completely agree. NFTs, like, as art, is just, that's a narrative, and if that gets you to understand what it is, then that's great. But you could, like, NFT video games. So, like, as in the game, like, I was thinking about this too, because we, you know, some of my friends and I will play different kinds of, like, just like group game, like board games and stuff. And I'm trying to remember the name, but like sometimes you'll hand out roles. Like someone will be like the policeman, some people will be like the villager or something like that. Well, guess what? Like NFTs make some of these games way more fun and interactive, and you can connect people all around the world in all these different ways. You could literally construct like you have a pirate ship. There are, 6 crewmen. Each token allows you to be like on the crew, and you have these roles. And if you don't like do your job, the token gets redistributed to someone randomly in the queue. And you have this game that's like playing live 24/7 all the time by someone somewhere, and you can just watch. I don't know. It's just, I mean, this is just me like spitballing, but it's kind of crazy because you can't, like, because you're totally right. It's an unconstrained technology. And the idea that an NFT just has to be the Mona Lisa in the digital age, it's like, I mean, I am incredibly enthusiastic about the way that it's going to help, the arts monetize better. I think that's going to make the world a more exciting place to live in. But yeah, it's not tapping into the potential enough, right? Or I was talking to someone, reached out to me who was in the music space, and he was like, "Hey, how do I get involved in crypto, but for music?" And obviously, like, okay, you can release your album on an NFT, but I was telling him, like, you could also get creative. Like, you could release versions of the song that kind of like blend into each other depending on the weather, and you could use like a chain link, like an oracle, to kind of like change the music based on the mood, and the mood could be dictated by like the actual weather. You know what I mean? Like cool. That's like, and that's what artists are like. That's art, right? Like that's not like some technical application. I'm talking about like culture. Like instead of preset playlists, you could construct something really beautiful. And yeah, I mean, this space is just emerging, so it's all about just like, what can you think of, right? Which is kind of awesome.
Yeah, man. Yeah. That's no. I mean, and the last thing I was like, even right now, like Uniswap V3, right? They're using an NFT 7, or they're using ERC 721 contract, which is an NFT for the LP position, which is super smart. And it is funny. Have seen some people selling some on OpenSea, by the way, which is just like, all right, like have fun with that. But it's cool. People are trying new things.
Yeah, no, it's a completely new space. It's really exciting. I think, I mean, collectibles are just a start, but like, I'll give you, the honest things. Like I'm still really early in my learning too. And I, like, most of what I know about DeFi outside of Ethereum is just enough to convince me to go all in on Ethereum, but not necessarily enough to invest a lot in DeFi. But as I've explored, some of these things, like one thing I'm looking at is I wrote this huge investment piece. I got a lot of attention from it. Separately, I know that writing is not a job that traditionally rewarded people. It was very hard to monetize, right? So now I'm looking into like, are there ways to monetize like investment research through an NFT, where instead of having a traditional finance subscription service, I can have a limited edition copy of my research go out. There's 30 copies ever available, and every week they're on auction. So if my research is more valuable to you this week, then guess what? Like, you bid to see if you want to be like, get my like IP that I created this week. And if like I am doing bad research and no one wants it, the price will go down. But if everyone wants to know what I think about, Thorchain, then that might be 1,000x more valuable than a Substack subscription service. Yeah. And Substack is brand new, cutting edge, but like DeFi, you know what I mean? It's just insane. And that's just me, again, like, I haven't even looked into how to construct NFTs well, but the cool thing is, like, if I sell a subscription service research article and it's limited edition, other people can now sell, like they can resell my research and I can get a cut of that. That's a whole different model for writing, right? Where now the content is exclusive to 30 people. Those 30 people actually can sell the information to profit again. And I can get a cut and I can encourage that. You know, writing's never been monetized that way. and neither has art, honestly. And so I mean, it's just kind of interesting because I'm not even in the space yet. I'm just like getting in and I'm like investing and I'm writing and I'm like, oh, like I could do this just building off of what other people are setting up the infrastructure for, and it could be massive. And so if I'm thinking that way, like once this gets real attention, I mean, everything's going to be built on DeFi rails, right? Yeah. And that's so cool to think about.
I really think
that was a great idea, dude. Yeah,
I think that's a great idea. And you know, like one other thing, like it definitely incentivizes performance, which is such a one thing we always talk about in our world is permissionless meritocracies, where you know you don't need somebody to tell you congratulations, you just went through this as a doctor. You had to get credentialed nonstop, and you will every year continue to maintain credentials, and that credential supports that credential and everything like that. You had to, there was a permissioned meritocracy, right? Still good. Like the best doctor is going to perform, but you know, that doesn't, there's a lot of people that don't take the opportunity to go that route. Right. And they kind of feel like
it comes at a cost, right? Yeah. Anytime you have a permissioned system, the system pays a price for like regulation comes at a cost. Rules come at a cost. There are inefficiencies, right? And so it's like if you build that inefficiency in and you believe it's worth the cost, that's an argument worth having. But it's just like, you know, take that cost seriously in everywhere you encounter it, including in healthcare, right? And so like I talked about how I'm like a little worried about it in healthcare because I think I take the arguments on both sides much more seriously in healthcare necessarily than I do otherwise in other places. Just I know the area and I've seen a lot of like harm done in like clinical trials of vulnerable populations and things like that. But man, I both sides, right? Because healthcare is no different than finance in the other way too, where the upside is insane and you cannot undervalue that upside. And then I get really skeptical of it then when I look outside of healthcare and I look at places where I think I'm like, oh, I think that you're underestimating the upside here quite a bit. And the downsides may be more limited than kind of the arguments that I tend to encounter in healthcare. So yeah, I mean, permissionless, it's like not a coincidence that DeFi is so exploratory right now. It's built for that. You know what I mean? I mean, it's like permissionlessness. Like when we were building the internet for the first time, you're doing something kind of the new frontier. But DeFi is literally like philosophically constructed to be permissionless, and permissioned systems get criticized insanely. Like, you know, if you have a Binance chain and people look at that, like it takes half a second for people to go, whoa. If like, you know, if the US government wanted to just intervene and shut that down because they could shut down Binance, they could shut down Binance chain. I just don't really take this product seriously in the same way that I take the Ethereum layer 1 seriously. That is not like an argument that I see happening like on the fringes. That is, I think, how most people that I speak to view the crypto space, where being decentralized is like everything. I mean, measuring decentralization is such a key feature of the analysis of any crypto asset. And so, yeah, it's built to be more opportunity driven than anything else. And that's what unlocks the opportunities. The inefficiencies in a regulated system are opportunities for DeFi, right?
Yeah. I mean, a great example is Hayden Adams. He didn't need permission to build Uniswap. He just built it. And I mean, how they've got billions in their treasury to fund products, right? So when we talk about the permission side of things, there is a permissioning once, let's say you want to build something on Uniswap and you submit your idea, and all this sort of things, the community can vote on that. But, you can do it pseudo-anonymously. You can submit your project pseudo-anonymously. It doesn't have to be, hi, I went to Harvard and, I whatever, like I got an A in this class, or, you just like, hey, here's a great idea. And, me and this person who can, we're kind of budding developers, but we're going to make it happen. What do you think? And people are like, we think it's a good idea. Here's $1 million, go. And, it can happen. So there is some permission side to it, but you can create literally, I mean, it was like a $30 billion, Uniswap is a $30 billion market cap. When I was looking at it recently, I forget what it is now.
It's pretty incredible. Yeah.
It's a year. Is it a year? A little bit over a year old?
Uniswap's from like 2017, 2018. They were like, yeah. Or this year. I mean, yeah, they hit like 10 billion volume, 8 billion liquidity locked. I mean, with V3 just flipped V2 volume earlier today or something, I think. And personally, I haven't used V3 yet, but it looks nice. Looks pretty nice.
I used it a week ago or something. Yeah, it's beautiful.
No, the last thing I was gonna say on that, like crypto is just one of those spaces, like you said, it's permissionless. There's a product called Alchemex, right, that got a lot of press coverage. Entirely anonymous founder that looks like a woman but is a dude, basically, and it got a ton of mainstream finance love. And honestly, the project's doing pretty well. Don't ask me to explain it. The loan repays itself. It's not a scam, for real. Just can't, and I unfortunately cannot explain it on granular level, but it's not a scam, that's for sure. It's actually a really awesome Mark Cuban just aped like a bunch of money into it recently.
It's a great project.
Yeah.
I'll say those things are interesting because so when I look at something like Alchemex, and honestly, this applies to a lot of products, I think the potential, it shows you, I think it shows you two things. One is it shows you the potential for creativity that can be unlocked in the DeFi space, because this product really just required someone to just think bigger about what non-institutions would be willing to do. I mean, would like a private bank be willing to create this like structured product for you? If you're like a billionaire, like probably, because they'll do anything you want if you're a billionaire. But like for everyday people now, you can use that. That's pretty amazing. I think the flip side of it that I've been thinking a lot about is I cannot imagine that this can't work without being taxed, is kind of the thing I wonder about, because it's like the tax situation right now is so naive, and in the scenario in which we win is a scenario in which the market caps get so large that the government just can't afford to not tax it, because it'd be literally like we're moving the financial activity from traditional finance where it's taxed to crypto. And so if it's not taxed on crypto, then crypto just becomes the like tax haven. We've like ended taxes, right, or something. So if you, like me, are skeptical that that's going to happen, if I'm like, yeah, crypto's great, but it's not the end of governments, then the way that it's taxed is going to be very different. And I'm starting to explore the DeFi space, but I'm just paying a lot of attention to like the profitability of something like Uniswap. How does that change if you have to pay taxes on loan forgiveness, right? Because in traditional finance, you'd have to pay taxes on that. In Alchemex, they're gonna, your loan is gonna repay itself. And it's easy to get excited about that, and it is exciting. But in a world where Alchemex does well, I think it would have to include that transaction being taxed the same way that it would be taxed outside of DeFi. So it's just something I'm keeping in the back of my head, right? Because I'm like, okay, this works, but does the math work in a win scenario, right? Because sure, if DeFi is always on the fringes and it never matters enough to get taxed, then it's not a problem. But I'm also not filthy rich with my alchemics investment. I mean, I'm not in alchemics for now right now, but just hypothetically. So it's just something I'm thinking a lot about as the space develops,
Yeah, we were getting some news yesterday too. Like Biden's like, yeah, we're gonna want to report anything over 10K, and I was like, it's not even like cool. Like that's a pretty obvious thing to do, and like it's also not a law yet. So why is anybody freaking out? Like nothing is signed,
And
right?
it's painted as
normal.
fear.
Yeah.
It's painted as fear, and I'm actually like I've been thinking a lot about that because my portfolio is pretty much entirely Ethereum. It's like I'm like 95% ETH and 5% a few things that might non-linear things that might get me more ETH purchasing power. I mean, this is just my thesis and I'm all in on it. But I will say, so then I'm like, I did this research. I should look into DeFi. And I see ETH as the best risk-adjusted return and potentially the best absolute return. Probably not going to outperform small DeFi projects, but compared to the bigger ones. So when I'm looking into the space, I've started to shift to thinking maybe I should be looking at what DeFi plays am I bearish on, because I want to. So like I come into this as like from like an investing perspective, not necessarily like a building crypto products perspective. So I want to increase my purchasing power. Like that's what every move I'm doing is about, increasing my purchasing power, right? So right now, like being long Ethereum, I view as the best way to do that. But it does strike me like, okay, if I view taxes as actually affirming the thesis, like a win looks like us getting taxed because we're so big that we have to be reckoned with, and an infrastructure has to be built around that. But if the market views that as a sell-off event, that's the perfect thing, right? Is when the market sells off on something you think is bullish, you want cash in that situation. So I'm like, okay, like, are there ways to, like, if I was to take like a trend following approach to like shorting DeFi token, like what DeFi tokens do I have the most bearish perspective on and why? And I don't have mature opinions about that yet, but it's something I'm starting to explore, because I'm like, honestly, like I think if you're looking at it, like a lot of us who have a lot of conviction, like all of our purchasing powers in this space, and from a portfolio management perspective, if I could put 10% into like strategic nonlinear short positions on stuff that I think is correlated to Ethereum, but maybe like a bunch of hot air, because it's not that doesn't exist in DeFi either. You know what I mean? There's a lot of stuff that is nothing there too. And so, yeah, from a kind of portfolio management perspective, this whole like taxation, regulation, fear, uncertainty, that's opportunity. That's something I'm thinking a lot about right now, and definitely next couple of months I'm going to be thinking more about how to safely I'm going to think about how to safely bet against DeFi a lot more as it rises, just the same way that any smart investor is thinking about how to safely take a long position as it goes down, right? Because that's where the opportunity is like you want to be ahead of the move. That doesn't mean buying a falling knife. I'm not going to short Ether as it spikes into a manic up move, but it's just like, yeah, like taking like whether it's through options or trend following, and then looking for things I actually think are frauds, rather than just, I'm not going to short Ether. You know what I mean? But if I could find something that I think is like there's nothing here, and it's just going to go up with Ether, and then it'll fall apart either independently or correlated. That's whenever I hear these like tax uncertainty things, I'm like, that's opportunity, man. It's opportunity. Got to figure it out.
Yeah. Let's you got to get going here. So let me make sure we cover the last little bit. I want to say so when we talk about the 30,000, 50,000 base case for Ethereum, that is using the Bitcoin stock to flow model. It's using payment networks as a growth, Metcalfe's law, a discounted cash flow model on year-to-date fees. So if we were just being fundamental analysis in the crypto space, that gets us to about 30 to 50K. And we can't be too accurate on that because there's a lot of trust me, I'm, 200 to 400 on Bitcoin, like somewhere in there. We know that the accurate number may be like 29,200, but we also have to add the speculative nature and the volatility of the space. So 30 to 50 goes there. What gets us, and that's, trust me, that's more than 10x from here, and I'm excited about that. That's that gets me up, and that keeps me from going to my computer and being like, oh, what thing can I do today? Where can I move my money today? Oh, I can go and chase this project. I can go and chase this project. I can move it around. It keeps me from doing that sort of stuff. As I have a Bitcoin model myself, and of course I have my own shitcoin strategy too. But ultimately, I know where it's going to go. I know where my projections are. That keeps me from spending all day staring at my screens and giving me the opportunity to go out on hikes and spend time with my family and all this sort of stuff, because I know where the outcome's going to be, or I have a good understanding of the outcome. Now, look, 30 to 50,000 Ethereum, probably the most optimistic I've heard people talk about anyway in, forever. So you already are blowing people's minds with 30 to 50K, and you get to those numbers pretty well, much like the 2-bit stock to flow model on Bitcoin has adopted and like proves itself out. You've pretty much been able to prove the 30 to 50 out on its own. EIP coming up, EIP 1559 coming up. Let's talk about how you see let's kind of stack it and package it really nicely, how you see 150 happening, and just like maybe a minute or two on just like boom to boom to boom to boom.
Yeah. Okay. So May 28th, Arbitrum comes out. That is a scaling solution. So we're going to start to see the whispers like, hey, the Ethereum network is able to scale. It's a little cheaper, easier to use. July 14th, EIP 1559 comes out. That will do kind of two things. One is that it actually is a decline in selling pressure because you're burning a lot of the ether that would normally go to miners who are going to sell. So that's going to have the effect of as a 30% decline in selling pressure. So a little less than half of one Bitcoin halving event, right? So I think that's so in the long term, I think that alone would cause another like huge up leg in price. In the short term, it's going to do the same thing that the Bitcoin halving events, which is it's going to eat up that overhead supply. So like right now, we just sold off from 4,000 to 2,000. There's some overhead supply. If EIP is happening when this type of thing happens, the increase in activity that you see on the network as you sell off actually eats into the supply. And then as you go back up, you have supply decreasing and decreasing. So it just is a nice like lubrication to the up move as you rebound, right? So that's the start, and that'll be operating, forevermore. That's also going to start to create some much stronger noise around Ethereum as a store of value, because when you have EIP 1559, you can start making the case that Ethereum is going to be deflationary. And so people will start paying attention. I think the price at this point is continuing to go up, but it's still possible that it's going to be largely correlated with the rest of the market. It's incredibly possible that Bitcoin could still be keeping up, or at least, going up enough that that's where a lot of the attention is. But I think, we'll be seeing these significant moves. Then that's going to lead us into the merge to proof of stake. That's going to happen. Right now it's scheduled we're expecting mid-November. There have been some whispers of trying to bring it earlier into October. There's always some concern and kind of the expectation of delays. Maybe it can go to December, January. But I think a lot of people agree with me when they say that's the money event is in proof of stake, right? So EIP 1559 is important, but proof of stake is everything. If I say there's 3 halvings, 0.5 of that is 1559. 2.5 of that is proof of stake, right? So when the merge happens, the entire goal of proof of stake is to shut off the miners. All the sell pressure from the miners is gone. And it's not that it's replaced with nothing, but it's replaced with however much the stakers need to sell in order to manage their very limited expenses. Now it costs almost nothing to stake. So those expenses are going to be largely just taxes, really, right? Nice thing about taxes is you don't need to be selling constantly throughout the year. And a lot of these people who stake, absolutely, especially the early ones, and I think a lot going on, we're going to restake their yield. So we're going to see as a dramatic decline in sell pressure pretty instantaneously. Like the Bitcoin halving, that doesn't mean on the day of the halving, you're going to have a huge uptick in price. It's not what we've seen in Bitcoin's halving event. It takes 3 months typically to get things to kick off, right? So, but if we have a November proof of stake merge, that means I think by January, we're going to start to see like, we're going to start to see us kind of breaking up to new highs. By January, February, that's going to start happening. People are going to be seeing these incredibly high yields because as we go up to new highs, fees go up. That means more Ethereum is going to get burned. It's going to be more deflationary. Yields are going to go up. The narrative is going to accelerate because the higher the price goes, the more activity you see on the network, the more conviction people have when they say it's a deflationary store of value. The more conviction people have when they say this yield is too attractive to pass up on. That's when the media picks up on it, right? This is going to come alongside more scaling solutions being released. And with the scaling solutions comes legitimacy to the entire project. Because now when the media covers it and someone says, and someone on CNBC, like, Sorkin's going to be like, oh, but last time I looked, this can't scale. They're going to just say, look again. So now you're going to have yields shooting up, deflation. You're going to have scaling. And the media is going to cover that because the price is going to be at insane levels. Like, so this is where we could start to see, 30 to 50,000. I think if I'm calling for 150K by January 2023, 30 to 50K could happen anywhere in that range, like March 2022. Obviously, the timing is highly speculative, right? But that kind of area where you have some time for proof of stake to have settled in, for the narrative to kind of have moved flows, and for people to really pick up on it. And then how do you kind of get that last break out? Well, a couple things happen. One is narrative adoption is going to increase actual adoption. So I think that a lot of these valuation models, I just talk about how there are lots of on-ramps for them to be revised upwards. The analogy I would use is that if you look at Tesla stock, you might be highly skeptical of the underlying fundamentals. But if you look at the way the narrative has changed, it was entirely predictable that as the price went up, analysts started to reach farther with their valuation models. They started adding things like robo-taxis to their valuation models, right? So you might disagree with that as a decision, but don't say it wasn't predictable, right? And same thing, I'm not saying here that the most accurate valuation model is going to say 150K, but if Ethereum is at 50K, there are going to be a large number of analysts who will say, my valuation model says 300K, and here's why. You know what I mean? And that's going to come in the context of dramatic illiquidity as more people stake, as more people put their money into DeFi. So you're going to have 30% of the market cap locked away. You're going to have the price at 50K, and you're going to have this like kind of amazing competitive solution. And then wild card, we don't know when this is going to come out, but we expect an ETF to come out. We know Canada has already released both Ethereum and Bitcoin ETFs. We know the US usually lags behind, but that if it works out in Canada, the US is going to run out of reasons to not also approve it here. And by then, we'll have had 12 months of evidence that this worked in another country. And so I think that 12 months from now, if the SEC is looking for evidence that this can happen in a kind of protecting the consumer way, they'll have that evidence. So the exact timing around the ETF is highly uncertain. But in that context, that bomb is going to drop. And that is going to shoot the price up. I talk about in my paper how that'll shoot the price up in anticipation, but that's not a flow that can be arbitraged in, because no matter how it works in anticipation, when the actual ETF happens, the ETF is going to be highly liquid because people can buy the ETF. They're just sending money to the ETF provider. The ETF provider has to turn around and put that money into Ethereum. There's not going to be any Ethereum left to buy, right? So you're going to have 50K price, no Ethereum left on the market to buy. You're going to have a significant flows to buy it, and you're going to have valuation models that now affirm it, right? So I've been watching analysts upgrade, and I kind of joke around it in my report, but it's entirely predictable, where I think 12 months from now, valuation models are going to reflect that kind of narrative change. And so in that context, could I see it hitting 150K? Absolutely. But what I'm saying right now is there's this black curtain ahead of us where no one can see what the world looks like ahead of proof of stake. And so in a world after proof of stake and EIP 1559 have already come through and that event risk is off the table, it's a perfect storm.
Man, that right there was it. Dude, Aaron, let's go buy some Ethereum, stake more.
I was going to buy more. I was going to say to our listeners, with the 150K target, you only need 10 ETH to be a millionaire, by the way. Just fun facts.
Or
100
or 1,000.
Or 1,000. You know, I definitely am at the point where like I have a lot of DeFi, but I feel like I'm going to have a good rotation opportunity in the next couple months. I'm going to be going heavier on ETH, but yeah, man, thanks for all that. That was amazing.
That was incredible. Yeah, it was good. All right. Where did you want to send people to find more about what you're doing? I know.
Yeah. So follow me on Twitter. At SquishChaos is my investing Twitter. I also have a Substack. Like I mentioned before, not sure exactly what I'm going to be posting on the Substack, but by subscribing to my Substack, I know that you want to hear about what I have to say. And so I've been kind of any idea, even if small ideas, I've been sending to my Substack subscribers, even things outside of crypto, because I do think about just investing at large. So definitely check the Substack out. And yeah, I mean, I'm going to continue to be active on Twitter and really try to take accountability for my thesis as things go on. You know, it's easy to just be cryptomania, but I like to think that I did this rigorously. And that means that as evidence comes out, if it does falsify aspects of my thesis, I want to be honest about that, because I think I, like others, have too much money on the line to just confirmation bias my way through this whole thing. Yeah. So, you know, if I can find out I'm wrong, want to find out quickly, and I'll tweet about it if I do, but I think I'm right.
All right. At SquishChaos, and then that's squish.substack.com for that. Man, it's been incredible hanging out. We'll have you back on, especially if you get something else out there. Ping me as soon as you do it. Obviously, I'll. You don't have to remind me anymore. I'm there. I'm on it.
Sounds good.
Yeah, it was a great chat.
Loved it.
All right. Okay, hold on.